I've made lots of mistakes, Dave. That's part of the game. I mean, there is no way in the investment business. If somebody says to you they never made a mistake, check them out. But that was a fairly large commitment, and I would say that the competition. What's really fascinating to me, actually, is what Amazon did with the cloud. I mean, here is a company that you don't even think of as being in that business 6 or 7 years ago, and Jeff Bezos has really taken something. You wouldn't have thought they'd be doing that, and from a standing start. And he has even said on Charlie Rose, he was amazed at how much runway he was given. But here are a bunch of very smart people in the tech industry around him, and not just IBM, but Microsoft, Google, you name it. I mean, the people, and they let all of them have a big lead, and you don't want to let a smart fellow have a big lead. In the tech business, you have a group of very smart people who have access to resources, and they're all the time trying to figure out how to bring out a better product than you have. I mean, here, I may be carrying this around, but this was the hottest item around, I'm sure, at one time. But
well, you've got a big investment in Apple. They're coming out with a new iPhone. You might want to think about it this fall.
Yeah, well, Tim Cook's reminded me of that a few times. That investment was made at the very end of September or the first days of October of 2008, and GE had been funded with extraordinary amounts of commercial paper, and the commercial paper market ended, and they really had a problem, and there was no question in my mind that it would be temporary if the government got its act together and the economic engine got back on the tracks, which I was sure it would, and so we did buy a $3 billion worth. Piece of preferred with some warrants, and
it came with a 10%. It came with a 10%.
It came with a 10% coupon callable 110. We made some money on it. We didn't make as much money on that as we made on our Goldman investment.
But Warren, looking back, I mean, there was a time where I think Immelt had your full confidence. Looking back on it, do you think that was misplaced? Have you revised your overall viewpoint of how he led GE over his tenure? Have you looked at that and revisited that and think, wow, this wasn't what it appeared to be, or no?
Well, I keep looking at GE. I won't comment. Jack Welch is a very, very good friend of mine. Jeff's a friend of mine, and clearly there were mistakes made, and they made mistakes in long-term care. We made mistakes in long-term care. They weren't to the same degree, but that turned out to be a huge one. And I will read their 10K when it comes out. I'll read it very, very carefully. It'll probably take me all day to do it, but I'll do it. And no, insurance costs them a lot of money, and it's cost other people a lot of money. You can make big mistakes in it.
I've been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And that I was taught that, we'll say in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts, and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. It's disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks. And Berkshire was selling below its working capital per share. You got the plants for nothing. You got the machinery for nothing. You got the inventory and receivables at a discount. It was cheap. So I bought it. And 20 years later, I was still running a lousy business, and that money did not compound. You really want to be in a wonderful business, because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake. So you might say I learned something out of that mistake, and I would have been way better off taking what I did with Berkshire is I kept buying better businesses. I started the insurance business, See's Candy, the Buffalo, all kinds of things. I would have been way better doing that with a brand new little entity that I'd set up rather than using Berkshire as the platform. Now I've had a lot of fun out of it. I mean, everything in life seems to turn out for the better, so I don't have any complaints about that, but it was a dumb thing to do. I went into U.S. Air. I bought a preferred stock in 1989. As soon as my check cleared, the company went into the red and never got out. I mean, it was really dumb. I mean, I've got an 800 number I call now whenever I think about buying an airline stock. I call them up any hour that, fortunately, I can call them at 3 in the morning, and I just dial and I say, my name's Warren, I'm an aeroholic, you know, and I'm thinking about buying this thing, and then they talk me down. I mean, it takes hours sometimes, but it's worth it, believe me. If you ever think about that buying an airline stock, call me and I'll give you the 800 number, because you don't want to do it. But we got lucky in terms of how we eventually came out on it. But it was a dumb, dumb decision, all mine. And I've done biggest in terms of opportunity cost, eventual costs. I bought half interest in a Sinclair filling station when I was about 20 with a guy I was in the National Guard with. And I had about $10,000 then, and I put $2,000 in, and I lost it all. So that was 20%, and that means that the opportunity cost is now $6 billion of that filling station, which is a big price to pay for, you know, getting to wipe a few windows and a few windshields and things like that. So actually, I like it when Berkshire goes down because it reduced the cost of that mistake on an opportunity cost. But the biggest mistakes we've made by far, I've made, not we've made, biggest mistakes I've made by far are mistakes of omission and not commission. I mean, it's the things I knew enough to do, they were within my circle of competence, and I was sucking my thumb. And that is really, those are the ones that hurt. They don't show up anyplace. I probably cost Berkshire at least $5 billion, for example, by sucking my thumb 20 years ago or close to it when Fannie Mae was having some troubles, and we could have bought the whole company for practically nothing. And I don't worry about that if it's Microsoft because I don't know it. Because Microsoft isn't in my circle of competence. And so I don't have any reason to think I'm entitled to make money out of Microsoft or out of cocoa beans or whatever. But I did know enough to understand Fannie Mae, and I blew it. And that never shows up under conventional accounting. But I know the cost of it. I know. You know, I passed it up. And those are the big, big mistakes. And I've had plenty of them.